Good morning, commodities traders. Welcome back to technical analysis on natural gas, UNG, US dollar, oil, gold, and silver. So we're looking at the support resistance levels as well as the most likely scenario price to be heading into later this week. All right, and I did the stock market update video yesterday, so if you guys want to check out the QQQ as well as the mega cap tech sevens, make sure to check the previous video and let's get started. So if your chart doesn't look like mine, make sure to click the ADJ down here at the corner. It just adjusts for the contract gaps, so you won't get all those gaps. All right, so natural gas is looking good. So it's looking like bulls did their first step. Go to the 8 hour, you can see they pretty much did exactly what I said they wanted to do. I said I want to bounce over this EMA 12, which is this teal looking line, is exponential moving average 12. And I want, after getting over it, I said I want to see bulls use it as support. So you can see we bounce above it, came back test that EMA 12 active support, bounce off of it. So that is the sign that I was looking for. So it's perfect. We also formed that 8 hour inverse head and shoulders, which is a bullish pattern from a downtrend into a uptrend. So now we're in an 8 hour uptrend. So that's a good sign as well. And now the next step for me is I want to see, can the bulls get that daily uptrend going? So go to the daily chart. This is just one initial move, right? We don't have any pivots set yet. Pivot is a higher low, meaning on the next pullback, the pivot is going to be higher than the prior low. So it's called higher low. And then we want a higher high, meaning the next move up is going to be higher than the prior high, which is this high. So if we next time we get a pullback, I want to see same thing. EMA 12, this exponential moving average teal looking line, act as support, and then we bounce off of it and then head higher. Or best case scenario, bulls make another leg up, get even more room. And then once this EMA catches up, we then pull back test, bounce off of that, and get a daily uptrend. So that'll be the perfect scenario for bulls. And at this moment, we do have enough room already. I mean, we already bounced 16%, so there's definitely enough room to get that daily trend change going. We just don't want to give it all back when we do pull back. So maybe like a 30% pullback to a 40% pullback would be the most ideal. That would be a bull flag. So let's say we started red Monday here, and we start pulling back, right? We don't want to see too much of a pullback. Something along closer to this, like 2.07 would be nice. We get a bull flag or something like that, and then we head out higher. Last thing we want to see is we pull back more than 50%. That will start favoring the bears. So keep watch on that. But best case scenario is we get another green day or two, and we'll get even more room for that daily trend change. Or we straight shot up to the 2.3. Best case scenario, get that daily inverse head and shoulders going, and then pull back and then head higher. That would be the absolute best case scenario. But let's see, bulls would need another 7.6%, which is possible for natural gas, definitely possible. We do see big moves for natural gas both directions, so that is definitely possible as well. And for you bears, obviously head back, break this low. But currently, you need to pull back at least 50% of this move for you guys to start picking up your momentum. At this moment, bull momentum is decent, and let's see if it continues. All right, let's take a look at UNG. So you see the same thing idea. So big bounce now, you can see it's over the EMA. So as long as if natural gas continues and head to this 2.3 zone, UNG will also come from inverse head and shoulders as well. 2.3 zone will be roughly up here for UNG. And then we can get that trend change going. It needs to break the neckline. That means it'll become an uptrend, right? Higher high will make that uptrend. So the inverse head and shoulders is pretty much a downtrend into a uptrend. Yeah, so far, let's see if bulls can pull off this week. All right. If you guys want to learn more about technical analysis, go to my Patreon page, or if you guys want to support the channel, go to the Patreon page as well. And free Discord link as well. If you guys want, it's a chat room. You guys come join, chat, hang out, talk about stocks. All right. And if you guys want to learn more about mentorship as well, go to the Patreon link. And if you guys just want a glimpse of it, just come talk to me. 15-minute, book that 15-minute free call, and we can talk more about it. All right. So this dollar talked about this for weeks and actually for months. This equilibrium tightening range finally broke bear. So you can see it broke bear here. We talked about this because rate cuts are coming up, and we're likely seeing a bear break because when you cut rates, dollar weakens. So we end up getting that bear break here, even though we didn't get a rate cut, but its market is starting pricing in close to 0.5% of a cut for this upcoming September. So that's why the dollar is already moving based on it. So we'll see. Pretty much it hit daily oversold. You can see the RSI just hit daily oversold right here. And historically, it marks the temporary low on these bounces. You can see daily oversold, temporary low. Doesn't mean this is going to be the all-time low. The bounce. Same thing over here, right? Daily oversold marked the temporary low for that area. But this time's a little bit different, right? Rate cuts coming up, so it doesn't mean this is going to mark the temporary low. But for now, it did. But we'll see how it will hold or not. All right, oil. So absolute perfect equilibrium still that I've been talking about it for months. Go up, go down, go up, go down. Look at this top. Didn't break this top, right? So that's another big go up, big go down. Look at this bottom. Did not break this bottom. Pretty much perfect. Picture perfect. Now we're moving back up again. So it's continuing to tighten up, right? As long as I keep tightening up and it doesn't break the prior low or prior highs, it is going to be continuing to be at equilibrium and just trade off of it. Continue to do trade off the tightening range until it breaks one way or the other, or until the range gets way too tight. There's just no point trading it anymore. Or for now, the range is still decent enough, right? Yeah, the 13% range. And gold also doing the same thing. Big move up, big move down, big move up, big move down, big move up, and it's tightening up. So as long as we know it's tightening range, it will likely continue until we see it breaks the prior high or prior low. Similar idea. Doesn't mean it's gonna chop all the way to here. We'll just have to watch to see when it breaks out of it. Very clear zone. As long as bulls hold above this area as well, they have nothing to worry about. It's pretty much the last demand zone for bulls. Yeah. Bears can't break below this area. Bulls have nothing to worry about. And silver is relative weak though. We talked about this for a while. You want to see silver lead, so don't play the relative weak one. Yeah, you can short the relative weak one. And silver continues to be heading lower. If gold continues to just keep tightening up, silver's going to continue to head lower because on each bounce, silver's going to bounce less. And on each drop, when gold tightens up, silver's going to drop more. So if gold's continue to just go sideways, silver is going to continue to head lower until that relatively weakness shifts. Usually it shifts when it hits the key support level, but currently we did hit some support level here, and that relative weakness hasn't really shifted yet. You can see it did bounce with gold, but on Friday it's just not really doing much either, right? So yeah, so it hasn't really shifted yet. Maybe it needs to head a little bit lower, closer to 25. Let's say we come down here, right, and we start to see green candles while gold was going sideways, then that means that relative weakness have shifted to relative strength. Currently, do not see that. But clear level of support, very clear right here. Triple bottom, which is this little area here, acting as support. Also coinciding with this prior resistance line, resistance, now acting as support. So bulls pretty much just need to hold this area, 26.4. And bears are in control at this moment because daily downtrend is still intact. Even though we got a big bounce, doesn't really matter that much. As long as the daily downtrend is intact, bears are in control on silver. All right, that is all I got for you guys. Feel free to comment below if you guys have any questions. Feel free to like, share, and subscribe if you guys made it this far or anything. And I'll see you guys probably early next week for more updates on the market as well as commodities. And have a great rest of you guys this weekend.